Good evening. Welcome back to Money Control's live stream. You're watching Closing Bell with me, Lavisha Darad, and my colleague Yatin Mota. Quite a manic Monday turned out to be for the Dalal Street. We saw both Sensex and Nifty see over 1% cuts. Nifty, particularly, it hit its lowest level in 4 months, majorly dragged by the index heavyweights. A broad based sell off was imminent and visible in the markets. We saw all the sectors drowning in the sea of red as well. Now, what contributed to this sell off? It's the tight race in the US presidential elections that brought in some nervousness in the markets. We have the Federal Reserve's interest rate decision later in the week as well, and the China stimulus measures, which will be kicking in at the end of the week. So, Yathan, all in all, the highs we have made so far, Nifty has reversed the trend, and we are now down about 9% from record highs. What do you make of it?
Clearly, today's downtick was a big surprise for traders and investors because we slipped below that 24,000 level on the Nifty, and not only that, the advance decline ratio also was quite weak, almost 1:5. In fact, if you look at the mid cap index, the small cap index, except for the Nifty Bank, which was showing some bit of strength, I think across sectors, across stocks, we had some weakness trickle in. The mid cap index is also down by more than 1% or so. Today, we also had the new listing of Afcons, listed slightly weak, tried to recover intraday, and ended the day higher by nearly 2% to settle at 474 versus the issue price of 463. So a muted listing there. If you look at the sectors, real estate, energy, media, all of those sectors sold off, and clearly a few of the mid caps also reacting to the numbers, were adversely impacted by the market downfall.
Yes, absolutely right, Heather. Now, if you look at some of the large cap stocks, M&M, that was the top performer. It gave about a percent returns after the record best SUV sales in the month of November. We had some other names in the Nifty 50 topping charts. That is your Tech Mahindra, Cipla, Dr. Reddy's, and SBI. SBI will be reporting its Q2 results later in the week, so we will be watching out for that as well. Some of the top Nifty 50 losers that included Bajaj Auto, Hero MotoCorp. Bajaj Auto, after it came out with its dismal October sales figures. Other than that, we had ONGC, Grasim, Adani Ports. That also dominated the top Nifty 50 losers pack. Yet then we saw a broad-based sell-off. Broader markets also underperformed the benchmarks. So what do you make of the broader markets?
Broader markets were also weak, as I mentioned earlier, almost 1:5, where the advance decline was clearly a lot of decline seen today. If you look at stock-specific things, stocks like Angel One, Emami, Chennai Petro tumbled over 6% in trade, and not only that, Idea Cellular that also succumbed to the market decline, down by nearly 7% in trade. We also had stocks like Astral and Birla Soft, which hit a fresh 52-week low, so weak momentum there. However, stocks like FSL, which is First Source Solutions, stood up 6% higher in trade. Obviously, last week when the results came in, they had revised their guidance upwards, and that's probably is resulted in buying at lower levels. Naukri, Gillette, as well as Fine Organics were the other stocks on the gaining side. But yes, in all, it was a very muted session for the mid caps as well as the small cap stocks.
That's right. Now, if we take a look at the first stock that dominated the pull down on the Dalal Street, it was Sun Pharma. Now, the pharma major, it has slipped about 5% after the New Jersey's district court delayed the launch of Lexelvi drug in the US markets. As of now, Sun Pharma is temporarily banned to launch the Bolnez drug until a favorable court decision or until the expiry of patent in lawsuit. Now, Lexelvi was a hot topic among analysts during the pharma major's earnings con call as well. Since that drug, they assume to project about $200 million in sale over the next 3 to 4 years. Which is a major revenue opportunity for the drug maker. Now, brokerages have started to revise Sun Pharma's earnings estimates to reflect the delayed launch. Nomura, for instance, they have assumed that a delayed Lexelvi launch in FY25 and an estimated revenues of, they had estimated a revenues of $10 million in FY25. Now, with the delayed launch, the brokerage firm expects an earnings as well as sentimental impact for Sun Pharma over the near term. But Sun Pharma, Yatin, what do you make of it? How does it look like on the
Mm.
charts?
I think Sun Pharma clearly posed the numbers also has been quite weak, and today after the court ruling in the US blocking one of the generic launches doesn't augur well sentimentally. But I think it's all to do with market sentiments, and the kind of fall we saw in the initial first hour of trade was quite big, almost 5% losses coming in. But stock tried to recover, and investors are hopeful that the defensives will do well in a rather volatile market. So IT and pharma stocks from the lower levels tried to recover some bit of the losses that they made intraday.
Yes, that's right. We have another stock in focus that stood to be an outlier in this bearish market. That was Mahindra and Mahindra. M&M, it surged after it saw record monthly SUV sales in the month of October. The management has also reflected some optimism and has said that the newly launched Thar Rocks fetched nearly 2 lakh bookings in just 1 hour post the launch. The company also recorded its highest ever tractor sales in the month of October on the back of a very good monsoon and good crop production. Now, after this, the stock got a buy call from Goldman Sachs. It projects over 20% upside from current levels. So, analysts at Goldman, they believe that the SUV's order backlog and the upcoming EV launches for M&M will lead industry growth compared to peers. It has also been upgraded by Kotak Institutional Equities to buy, and it expects that M&M will continue to outperform the industry growth across automotive and tractor segments. But Yatin, for M&M, what do you make of M&M? M&M? Has the bull run just begun for the automaker?
So, the shares of M&M have corrected quite a bit from recent highs of 3,200, 3,300 odd. Now, if you talk about M&M, clearly better than expected numbers, both on the tractor front as well as on the automotive front. In fact, for the auto business, we had record SUV sales for the month of October, despite the market skepticism that the demand is slowing and probably the price cuts or the discounts the company is offering will not augur well for numbers. But now with tractor sales and UV sales are doing better with new launches upcoming in 2025. I think a lot of brokerages have sought the stock as a value buy, especially post the correction of 10-15%. As you were mentioning, Kotak and Goldman, both of these big brokerages have upgraded the stock. So good going for M&M, and overall, a healthy month of October versus the market expectation that things might be slowing. But yes, if you look at Mahindra and Mahindra, Hero MotoCorp, Enfield sales, or probably sales for TVS Motors much better than the market expectations. But moving gears from auto to telecom, today we had DAM Capital, which has initiated a coverage on Bharti Airtel with a target of 1970. Now, shares of Bharti Airtel have been performing, the Nifty 50 benchmark indices for quite some time. And the reason is that the overall tariff hike which has been taken recently, that is going to help the ARPU as well as the margin picture much better in the coming quarters. In fact, DAM Capital says it's a multi-year roller coaster ride, and despite the fact that the telecom business is maturing, there are a lot of legs for earnings growth. In fact, the B2B business also continues to expand steadily, and from here on, the broadband business for telecom companies would get in earnings growth. In fact, they have estimated a 15% EBITDA compounded annual growth rate till FY27. And also, if you look at the overall Airtel Africa business, that is continuing to be the market leaders in the geographies it operates in. So, from broadband to African business to the standalone telecom business, a lot of earnings lever for Bharti Airtel, and hence DAM Capital initiating that coverage with a buy recommendation.
That's right. Yatin, it reminds me of BSNL. It's been ramping up its 4G coverage as well,
Yeah.
and it's trying to hit on to the remote areas of the country. So, a new entrant, but let's see how it plays out for the telecom industry as well. But moving to the next stock, we have OMC stocks in focus. They were under pressure in today's trading session. IOC, BPCL, HPCL, all of them dropped up to 5% after crude prices rose by 1%. So the rising crude prices, they came in as OPEC said that they plan to delay the production hike by a month. So any rise in crude prices, that is always said to be not good for the OMCs as they weaken their marketing margins. So after this, Goldman Sachs also came out with its report saying that all three OMC companies fell short of the Q2 expectations. While Goldman has retained its sell rating on Indian Oil, it has shared a neutral call for BPCL and HPCL. So apart from BPCL, both IOC and HPCL haven't performed well so far this year. Yeah, then looks like the bearish trend for the OMCs is here to stay, because Q2 also has been disappointing for OMC companies, and now we cannot see any relief when crude oil prices actually cooled off also from its higher levels.
Yes, Lovisha, I think oil marketing companies, the earnings, especially in the near term, are likely to be volatile because, ever since the Israel-Lebanon issue has started with, strikes on Iran as well, I think geopolitically, the crude oil prices have remained volatile, which impacts the inventory, gains and losses that oil marketing companies make. In the quarter gone by also, we have seen companies incur heavy inventory losses because of the volatility in the crude. So let's hope the crude doesn't remain volatile. But as of now, I think the markets, given the fact that there are US elections, there is geopolitical tension, and demand also slightly muted, the oil marketing companies have seen, sell off from the recent record levels it made. In fact, IOC, I remember, stock was trading at 180 plus, and now the shares have come around 130, 35 levels. So a healthy correction in most of these oil marketing companies, given the volatility in the crude oil prices as well as the refining margins.
All right, yes. But yes, Riketan, right, like you rightly pointed out about the US presidential elections, the voting is going to be underway from tomorrow onwards. Riketan, what are you pricing in for markets? What are they expecting, a Trump or a Harris win at this point of time?
So I think markets are also confused, but I think the overall early exit polls in the US show a trend which favors Trump, and probably he has a 5 percentage points plus lead right now. But the swing states will probably decide the fate of Trump, and it's to be seen whether or not Trump really goes in the first 2-3 weeks of his presidency into a trade war with China again. His handling of the Russia-Ukraine situation, the Israel-Iran situation is something that the markets will watch out for. Given the fact that Trump is outspoken in his last term, we saw the markets, become volatile with his tweets, coming in on trade bans, on tariffs, a lot of things. So whether or not the market likes is a separate issue. But I think the market currently is factoring in a Trump victory.
All right, a Trump victory, but we'll be seeing whether or not that true turns out true tomorrow as well. A neck-to-neck fight expected for the U.S. presidential elections. We'll be watching out. But with that, we have come to an end of this edition of Closing Bell. Tomorrow, we'll be watching out for U.S. elections and how the markets pan out. Whether or not Nifty holds above that 24,000 level, what is the new support levels as well. So, but until then, signing off, Yatin and me. Stay tuned to moneycontrol.com for all the news updates and market insights.